10-year note yields close out the day and the week higher, today marking at 418, the highest weekly close since before December FOMC. Now again today we tried getting up to that 420 level and fell just shy. In fact, we've only done that 3 times since December 13th. We've gotten there January 19th, January 25th, and today we fell within a basis point of getting to that 420, but failed to eclipse that level once again. So holding that, seeing that 420 support hold yet again today. Market or 10-year note yields were up about 17 basis points on the week as markets continue to readjust to the potential of no rate cut in March. Seeing that those rate cut odds being pushed out to May, or right now we're seeing 75% odds that the Fed cuts rates by 25 basis points in May. And again, seeing 10-year note yields move higher to end the week at 418. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice that despite the fact that yields have been moving higher this week, volatility moved lower. We actually saw volatility has been trending lower since the beginning of the year. Ultimately, the market continues to reprice and readjust to what Fed expectations are, helping to push volatility lower. So we haven't seen any big move through any key levels. Likewise, we continue to see the market moving towards Fed expectations, or what the Fed has been telling us, and that has pushed volatility lower again, closing out the day and the week lower in volatility despite higher yields. Lastly, let's talk about what we have next week. Well, next week can be summed up in one word: inflation. We do get CPI on Tuesday, followed by retail sales on Thursday and PPI on Friday, along with a slew of Fed speakers, so I'm sure we'll have a lot to say, not only about inflation, but about the potential for rate cuts down the line. So another busy week in 10-year note yields, seeing yields rally 16 to 17 basis points, closing out at 418, the highest we've seen since December on a weekly basis, ahead of next week's CPI, retail sales, and PPI.